Hi there, traders. This is Brad Gilbert with the weekly kickoff. Now, all right, this is a really important week and a lot of anticipation around what the Fed are going to do. The market is now leaning very heavily towards 0.5% cut. I think it's up at towards 60% probability, right? So the US equity futures going up, the US bond yields going down, okay? And that gives us a risk on profile. Euro, sterling, Aussie, Kiwi up, and the dollar pairs all going down. So this is a really nice framework. And to me, the sizzle is out of the market. There's anticipation about a 0.5% cut from the Fed, but there's not like crazy volatility, tenseness in the market. Now, US dollar index, we've got a nice level here on the downside for it to show us where to break. That's going to coincide with euro breaking higher. Like the dollar is primed to be going lower, right? And there's a few numbers this week to look at: retail sales, industrial production, to sort of keep the dollar on track. The 0.5%, it's in play, and that's what we have to deal with, right? And you got Aussie, Kiwi, sterling. We've got levels here galore to be looking at. So we've got a really good technical framework. We've got the fundamentals lined up like we've been wanting for some time, and now it's action station. So if I just run you through the calendar, well, actually, let's have a look at the interest rate probabilities first. 0.5% cut, 59%, right? This is the uncertainty, right? Because if it's only 0.25%, the dollar will probably rally because they are factoring in this 0.5% cut. So that's where the play is this week. And even looking at the ECB, right, they've done a great job diffusing the market. And what I mean by that is they've gone, you know what, we've got inflation under control. We're going to take it easy and see how it goes from there. So the next cut at the next meeting at the moment is only 31% chance of a 0.25% cut. What that does for us, it brings the data into play, right? Weaker numbers, that will go up, and that makes the data very reactionary. So you can see from the interest rate probabilities when it's around that 30% mark. Same with the Bank of England. Like all the numbers are in play, and we've got a big week for sterling, CAD, the dollar. I mean, most instruments, right? Let me just run you through a bit of what's coming out. Like Monday, okay, you got some bits and pieces for the market to sort of re-engage. I'm not hugely interested in Monday's activity, but you come into Tuesday, the Canadian and CPI numbers and US retail sales figures, definitely on the table, as is the industrial production, capacity utilization out of the US as well, right? So like these numbers here, if I just focus on the retail sales numbers and the other US numbers, they're sort of second tier numbers, third tier maybe at best. So they're not going to change the probability. If all of these came out really strong, which would be a stretch, well, then we might see that 0.5% ease back a bit. But if they're weak, it's a certainty that they'll go by 0.5, right? And this is the lead in when the markets have been talking about this for weeks. So you look at, that's Tuesday, you come into Wednesday, sterling CPI numbers, right? Very important to what's going on in the UK. As I said, like not only important for what's going on with sterling and the dollar, but also with UK interest rates, right? Really strong numbers here. No change, gets a bit more weighting. Weaker numbers, and we start to see the market pricing in a cut sooner than later. And that makes it very exciting and reactionary, right? We're in a position now where the game is fully on, right? We've been on pause for a bit, but I'm telling you, this is where it kicks off. And you come through sort of Wednesday, we come to the Fed, right? Fed funds target, 5.125, right? So the market is looking at 0.25% cut is 100% factored in. They're definitely cutting by at least 0.25. The market it has factored in here as I said, starting to look for a potential 0.5. I'll come to this when we get to the point of it. But at the moment, that's what's in the market, and that's what we're going to sort of see what happens. Okay, 0.5, not quite fully factored in. So if they do cut by 0.5%, we're still going to see the dollar run to the downside because it's only like 60% factored in. If they only cut by 0.25, well, we're going to see that 60% factored in 0.5 have to unwind, and that sees the dollar rally. But as I said, I'll cover more of that when we get to it. And that's Wednesday, right? So you got Kiwi GDP numbers. good chance to see what's going on down in New Zealand. On Thursday, we've got the Aussie employment numbers. Now, once again, the Aussie CPI employment numbers are in control of what the RBA are doing, and they are sort of sitting on the fence. To me, like weaker numbers here have a chance to change the projection of the RBA's forward guidance. Stronger numbers, they just sit on the fence like they are, right? So anyway, we've got opportunities there. Then we come into the Bank of England, right? So this is like, it's just like one thing after another. The vote count, vote unchanged, etc. It is going to be a lively event. And let me just come down here. If we come through the rest of Thursday, you got the initial jobless claims, existing home sales, like third tier numbers, right? We're already got the writing on the wall with what the Fed are going to be doing. So because that comes out the day before, that'll still dominate the global markets, right? The Fed decision will dominate global markets, and we'll see where everything lines up after that. You come into Thursday or Friday, I should say. We've got UK retail sales figures, so keep an eye on that, as well as Canadian retail sales figures. So it's a big week for the Canadian dollar, sterling, obviously the dollar in general. We've got Aussie employment numbers, Kiwi GDP. Like there's something for everyone here. And as I was saying, when I just come back to the charts here, you're looking at really good technical conditions. We've got sort of clear direction here, or pretty much clear direction with what's going on in the dollar. We just need the nail in the coffin. We get that dollar 0.5% cut, everything's lower, right? And it's a great time to be looking at dollar Swiss and dollar yen. The yen in particular, everyone's piling into this position now. Short dollars, long yen, or just long yen against everything else. That's the sort of big clue. And I'm looking for euro, sterling, Aussie, Kiwi, topside moves. They all look good. They all look structured. They don't look under pressure, and they look ready to make those natural moves to the top side. All right, so that's where we are. So just keep an eye on your fries. We've got, as I said, there's loads of data coming out. If I just sort of scroll back up here on my Metastock, you'll see the numbers pop out. You probably get a better idea when you're looking at the site, but it's all about the Fed, right? And we've got numbers leading into it. There's a few opportunities. Obviously, Canadian inflation numbers Tuesday, a good warm up for you, and the US retail sales. This is your warm up, and Wednesday, the Fed decision is the prime time, right? So make sure you tune in. I'll give you lots of information around what I think, where things should go and where they shouldn't. And that gives us opportunities galore, I think, to look to hit it out of the park. All right, guys, great week ahead. Good luck. Happy trading. Cheerio.